Welcome. You're watching Countdown right here on Bloomberg Quint Live. It's been an interesting turn of events. The Nifty has given up all of its early morning gains. In the second half of trade, you are seeing pressure building up on quite a lot of large cap names. You've got Z, you've got Ultratech Cement, you've got the likes of even an Asian Paints crumbling in the session. We'll talk about all of that and more in just a few moments, but let's take a look at the headlines for the day. It's a flat day of trade for the markets. The Nifty still trades, however, around the 10,900 mark for the week, though the markets may end a little changed. Z Entertainment sees its biggest intraday drop in 6 years. Put options in the futures have multiplied fourfold. Bharti Infratel snaps a 5-day losing streak and is the top gainer on the Nifty. Futures are seeing fresh long positions. And Maruti is going to be reporting its third quarter numbers anytime from now. Heavy discounts and subdued volumes are likely to drive a weak quarter for India's largest automaker. Good afternoon, Neeraj, and it looks like we've completely reversed all the early morning gains. Yeah, it's very, very flat and a bunch of names, casualties in the session today. It's a casualty a day, isn't it? I mean, you have either a mid-cap or a large cap name falling 8-10% or gaining 8-10%. It becomes the order of the day today. It's the extremes, yes. Bring up the mid-cap and the small-cap indices once, just very quickly before we get to the heat map, because the heat map is showing some interesting moves. Look at this. 0.5% lower for both the mid-cap and the small-cap indices. And then you will see Z and Ultratech right at the bottom of the screen when it comes to the heat map. Should get the heat map up now. And as you can see, Z Entertainment and Ultratech Cement. 7.5% lower for Ultratech Cement. Z Entertainment 12% lower. There are a clutch of other losers as well. ICICI Bank, for example, down another 2 percentage points. So the rest corrected quite strongly. There's some weakness in stocks like Hero MotoCorp, but these two dominate trade. Z is the talk of town right now. Don't quite know any possible reasons, but for a story that The Wire has put out, which is speaking about SFI probing some links with regards to some money transfers, etc. We do not have any independent confirmations or otherwise, but I would presume that's one reason why Z Entertainment has cracked so much. We just checked the pledges as well. Not that the pledges have increased too much or otherwise. So keep that at the back of your mind. Ultratech Cement, of course, a story well known, but 7% cut. And this should have a pressure point on Grasim as well. Yeah, Grasim too is down about a couple of percentage points. So fair degree of weakness in select names being countered by what's happening to 2 or 3 large caps. So one, HCL Tech and TCS, the Nifty IT names, and not all of them because Infi is in the red, but TCS is up about 1.5%. There is gains in Yes Bank yet again. Bharti Infra, Bharti Airtel are not doing too badly. Kotak Bank about 1% higher as well. So private banks by and large seem to be holding out well in the session today, save for ICICI Bank. So that's probably helping the index at least stay afloat now in the red. Devina, what are you spotting? Well, the mid-cap space, like you highlighted, the indices are down in the red about 0.5%. So that's a slight bit of a pain point this afternoon. But we'll quickly get the MRR going for you and the kind of performances that we've seen. So Edelweiss posted its numbers yesterday. The stock was down about 5%. Today is recovered about 7% on that count. Divan Housing Finance, another 5% given on the upside. Jubilant Foodworks, Group Finance. You've got the likes of a Bharat Forge doing well, 1.7% higher. Amongst the worst performers, you've got a Dish TV, which is down about 9%. Graphite India, HEG, both these counters. This is the second day in a row that the selling pressure and the stocks are succumbing to that. So about 8.5% given up for Graphite India. Berger Paints is down about 4%. Remember, we told about Asian Paints being down about 3%. Berger Paints in tow with that. Tbs Motors continues to grind lower. Just the day of the results, the stock did well. Post that, the stock has seen some pressure, so down about 3% right now. And PNB Housing Finance post numbers is down about 3% right now. But let's take a look at what's been happening in the futures and options space. We've got Agam Vakil joining in with the latest. Aga.
Well, Devina, I reckon that the broader markets are certainly showing a lot more weakness in comparison to the benchmark indices. And the benchmarks are not exactly showing us the kind of picture that has been playing out over the past 1 hour or so, especially when it comes to some of your, your broader markets. But at least as far as the Nifty is concerned, we have a little bit of an increase in open interest, but I wouldn't go as far as to suggest that this is towards fresh longs. The Nifty banking futures too is seeing some amount of traction with respect to increase in OI. But again, we're going to have to wait and watch for more cues coming in, whether or not this is towards the long or the short side. The India Volatility Index, I reckon, has certainly moved in the past 15-20 odd minutes. It's now up 1.3%, and it's at around 17.7, nearly around. With respect to your open interest changes, let's pull up that chart. Considering we have seen a lot of activity around the 10,900 mark. In fact, more writing around 10,900 call and unwinding in the 10,900 put. So, well, we're going to have to keep an eye on these as well. Let's move on and talk about, so that's your open interest distribution, currently indicating about a 200-point range between 11,000 on the higher end and 10,800 on the lower end. In terms of stocks, of course, we have spoken about Z Entertainment. It's now down 15%. It is at day's lows, and a lot of shorts building up into this particular counter. Moving on to Bharti Infratel, quite a recovery this stock is making, considering a good 6% hike coming through. And moving on to KPIT Technologies, this one is down 7%, and well, it's actually tuning up to the fair price that a lot of analysts are pegging for KPIT Technologies. And Yes Bank, of course, continues to show strength after yesterday's up move in the last 1 hour of trade. On the whole, we've seen a very, very mixed picture, but the concerns with respect to those stocks which are losing out, and the momentum is a lot more there.
Okay. Certainly visible there. Thanks for that, Agam. Devina, I don't know, 2 stocks, right, which stand out. Can't not talk enough about them. I know we'll have our guests ready, but and maybe go to the Biocon conversation as well. But Z Entertainment remains firmly in focus. Look at that cut that has come in on that stock. It's now down 16%. Obviously, volumes have gone up. You don't need either of us to tell you that volumes too would have shot up. But with a 16% gash at 365, optically valuations looking okay. But I don't know if it's got to do with just the wire story or maybe something else as well. The quantum of pledged shares that the promoters have, a bunch of other factors playing out here. Now hurtling towards that 17% mark, over 17% actually. So there's something out here which is pretty scary from a perspective of somebody who's holding on to the stock of Z Entertainment, despite good numbers.
Yeah.
And the day the numbers came out.
It actually did well, yeah.
Yeah, the day the numbers came out and the stock went up a little, that's the top over the last 10 days. Bring up the stock price for the last 15 sessions or the 1 month chart of Z Entertainment, or this month's chart, and you will see that's the day when it delivered the numbers. Post that, it's just gone down one way. And this is not a very pretty sight. Let's, so we'll try and figure out if indeed, with some expert, whether this is got to do with a story or the pledge data or a mixture of both. But you would probably presume that it's a mixture of a few things which is leading to Z Entertainment looking so weak, not the best of days. Okay, talk more about that in a bit. First, hear out a management call. Biocon reported a strong December quarter. Revenue grew 46% and net profit jumped about 2.5 times. The Biologics segment seems to have single-handedly boosted earnings, which has surpassed all expectations. Nishant Sharma had a chat with Chairperson and Managing Director Kiran Mazumdar-Shaw.
Well, this is certainly, we believe, an inflection point in our biologics business, and I believe that you can see from the numbers that the biologics business has more than doubled year on year, both in terms of the quarter as well as year-to-date performance. More importantly, you can see that the EBIT margins for the biologics business is a very, very strong 30%. So this has certainly led to the robust growth that you're seeing this quarter. And obviously, this is just the start of the biologics business opportunity, which is going to be contained and sustained over time. So we believe that, yes, this is a good inflection point for us, and you are going to see sustained momentum going forward, largely because this is a business that is not only high margin from the product supply point of view, but also more importantly from a profit share point of view.
Right. And how do you see the traction in the small molecules and branded formulations going ahead?
So I think small molecules has really done a sort of a turnaround, because I think you can see that the growth momentum is very strong, 27% year-on-year growth. Plus you're seeing that there is a uptick in terms of margin contribution. Plus, what is also important is that our generics business in the US is beginning to take off. So all in all, I think you're going to see a good, healthy, at least mid-teen, if not late-teen kind of growth going forward.
Right.
And this quarter, of course, has been a very strong growth in terms of this segment. But I'm very confident that even going forward, you're going to see a sustained growth momentum. So if you look at the size of our businesses, I think you're seeing that the small molecules, biologics, and research services business are almost now trending to be of the same size.
Right.
Of course, biologics is expected to overtake the size in the coming future. And then you're also going to see the branded formulations business beginning to pick up. Right now, that's sort of tracking at about half that size of the rest of the businesses. So overall, I think what we're really focusing on is revenue growth, margin growth, and of course, the profitability is increasing because of the nature of the businesses that we are in.
Right. And also, if you can give me a commentary on the fulfiller ramp up in the US and guidance post the launch by Coherus as well.
Mylan has been a very strong commercialization partner for Biocon. Of course, they understand the market dynamics very well. I think Mylan obviously anticipates competition, and Coherus was an anticipated competitor. As you recall, Biocon was expected to be a late entrant to that business. So all the calculations done was as a late entrant. But then to our surprise, we became the first entrant.
Right.
And that is the sort of advantage we took of being a first entrant. But as you can see, what Coherus has done is basically, followed suit in terms of what Mylan did. We expect Mylan to be a very strong player in biosimilars in US and Europe, and I think as a commercialization partner they would be in a better position to comment on some of these questions you asked. Having said that, I think in terms of garnering market share, they've done pretty well at an early stage.
And also, if you can give me a timelines on the biosimilars launch, small molecules launch of Pelfilgrastim and Trastuzumab in the EU market.
You mean biologics business? Yes.
Yeah.
The biosimilar Trastuzumab is expected to be launched this quarter in Q4. And I think, again, Mylan is going to focus a lot on making sure they garner good market share. And of course, we have to wait and see how they get into the market and at what pricing discount. But I don't think I'm in a position to comment because it's not right for me to comment. And it's very early to comment on how Mylan intends to shape that market.
And also commentary on biosimilar and Humira and insulin glargine launches in the EU.
So, as you know, Humira is a product that is basically driven by Mylan. It's an in-licensed product from a Japanese company, and we just have a financial stake in that in terms of returns on that product. In terms of Semglee, it has been launched in Europe. Early days yet, but again, I think Mylan is very committed to be an aggressive player in biosimilar insulin analogs.
And as far as the branded formulation is concerned, can you give me a breakup of the kind of growth you're seeing from both the India and the UAE market?
So this quarter actually reflects a very strong contribution from UAE, largely because for certain phasing reasons, there's been a channel stocking of products. Going forward, I think, so you are seeing a 36% year-on-year growth. But I think going forward, you're likely to see sort of a more realistic mid-teen growth. And the only thing I can say is that, yes, our biosimilar Trastuzumab has been approved in UAE under the brand name Canhera. So that is also likely to contribute to growth going forward.
And if you look at the going quarters, do you expect to expand the margin? Do you expect to maintain the margin? What's the roadmap?
I think, we should first focus on sustaining these good numbers. I think sustaining these margins, sustaining growth momentum is what we're really going to focus on. And of course, upsides will always contribute to improved margins and improved growth. But I think we want to focus on sustaining these levels.
Okay, that's Biocon, of course. The bigger news flow, of course, remains on Z. The index is about 0.25% lower, but look at Z. That is down 24%. Okay, we'll get in Yatin in just moments from now, but this is a scare of some sort which is leading to this. So just for the benefit of our viewers, if you go on to thewire.com, I think there's a story that they've published yesterday which speaks about how there could be some bit of a probe from SFIO's side, because they're saying their headline suggests, and this is the Wire's headline and not ours, but the Wire's headline suggests that SL Group link emerges to company being probed for suspect of demonetization deposits. Now, I don't know if that's the reason, but that could be one. And then, of course, this overhang on Z with regards to the promoter pledges. Remember, again, a story that we've done in the past with Aman. But so I don't know if it's a combination of multiple things which is doing this. The volumes, Devina, from 23 million to 32 million in a matter of 5 minutes.
Yeah, and the open interest change also has been phenomenal. Right now, it's almost a 50% change in open interest for the Z future. Right now, and aside from that, if you're taking a look at how much the stock has fallen, the last time we actually saw Z do this was around 26% decline, which happened in October of 2008. So since October 2008, this is the first time that you're actually seeing Z crumble to the ground the way it has been right now.
Yeah, this is pretty steep and very disconcerting as well. In a bit, we'll get in Yatin Mota, of course, to talk about what he's learning from people around and his math as well. So just waiting for Yatin to come in, but this obviously remains the top draw, and then of course we'll go to Ultratech as well as HEG2. But Yatin is here with us. Yatin, you would have made some calls. What are you learning?
So Neeraj, a couple of things, and let's start with what exactly happened a few months back during the Diwali period, that the promoters decided to sell their 50% stake to a strategic investor. And few days back when I was speaking to Puneet Goenka of Z on his quarterly numbers, he clearly said that there is a lot of interest in the domestic market and the international market with respect to the stake purchase. There have been various news reports doing, that people are wanting to buy the 50% of the promoter stake and come in as a strategic investor. But there is something other to what exactly is happening in the marketplace. We at Bloomberg Quint had analyzed the exact situation with the Z Group as to what kind of debt is lying with the SL Group, which is the Subhash Chandra Group put together, and we could find some interesting data wherein they had a lot of exposure to infrastructure sector, wherein the debt was quite high, over 15,000-20,000 crores. What I'm catching up latest with the dealing rooms is that there could be some concerns regarding the pledge shares also. It started with Dish TV, so Dish TV was the first stock which is continuously falling, and ever since they had merger with Videocon D2H, we have seen a continuous decline in the share price of Dish TV. And if you look at the pledge data for Dish TV, out of the 112 crore shares that the promoters hold in Dish TV, nearly 92 crores worth of shares are pledged. Almost 82% of the promoter holding in Dish TV is pledged. More importantly, with the fall in share price, probably it could mean that from here on, the promoters would have to top up money or top up shares for getting that pledge shares in place. More importantly, if you look at Z Limited also, the total promoter shareholding is nearly 40 crore shares, and out of those 40 crore shares, nearly 24 crore shares are pledged. That means that the total stake of the promoter is 41.62%, out of which nearly 60% of stake is pledged. And after this is as of December, and post that we have seen a sharp gash coming in the share price of Z Limited, which would mean that from here on also the promoter would either top up with additional shares or pay cash to the probable lenders to which the shares are pledged. So it is a very tricky situation, and we don't know.
I would reckon, Yatin, that the paying the cash issue might be a bit difficult, right? Because we all know why. I mean, one of the reasons being spoken about why, alleged reasons about why the stake sale also or otherwise was also that in the other group companies they anyways have debt problems. So it's not that the other group companies are coughing up cash for them to be able to do this. So this fall would have led to further shares being pledged.
Yeah, obviously, Neeraj. So this is a very tricky situation. Probably if the share prices continues, in the past we have seen a lot of these lenders really revoke the shares if you do not provide margins on time, and probably that also adds to the selling pressure. And Z is a Nifty 50 company, a widely institutional held company, and a 22% fall. I'd never remember in my career to see Z down 20-25%. So that is the kind of fall that we are looking at in this frontline company, which is very liquid, widely held among institutions, equally between domestic and foreign. And this is something which is to surprise of everybody. Of course, there have been various news reports regarding the promoters, selling stake, promoters being probed by SFIO. But I think there is more to this particular fall which has come in for Z, especially when the stake sale process is on. A lot of interest is being there from the domestic players as well as from the international side for the stake purchase.
Well, that says it all. There is pressure on Z and pressure of another magnitude. Yatin, thanks for putting that into perspective. So keep in mind that the promoter pledges have only gone up, and that should be adding to some pressure points for Z Entertainment, down about 20% right now. Okay, we'll get in Nikki Mirchandani as well, because the other pressure point, Devina, while Z Entertainment is down 20 in top draw, Ultratech Cement at 7.5% is nothing to scoff at too. That's pretty strong. But yeah, Z Entertainment, and
I was actually just looking at the foreign portfolio holdings, and about 42% is held by foreign institutional investors. So, I mean, this is going to be a big jobbing for them too. And whether or not they actually go ahead, and if the reason why the stock has fallen today, while the talks of the pledges has been around, it's not the reason probably for why the stock has done what it's done in today's session.
Yeah. Well, the other bit, of course, would be important to monitor is also what's happening with Dish TV too. Yatin mentioned that. Yeah. That stock too is down about 17 or 18%. Again, the issues surrounding pledge. But it'll be interesting to see what Dish TV has to say as well. 17% off for that stock too. 27.5 or 28 rupees is where that one is trading at. But yeah, Z and Dish, two stocks which remain under stress in the session today. Z more so because it's a larger one. Dish TV is now but a mid-cap company, still remains one of the largest DTH operators, but Z Entertainment down about 20%. The other one, of course, Ultratech as well as HEG and the likes. Okay, HEG and others, we'll talk about that, but since Ultratech is a Nifty 50 stock, 7.5% today after the big gash, or after the small downtick that we saw yesterday. It's not usual that you see this. Nikki Mirchandani, who tracks this closely, joins us right now. Nikki, possible reasons?
So yesterday in the trade, we saw Ultratech pretty much delivering good set of numbers, inline set of numbers, but then the stock did end the trade lower by with a cut of more than 1.5%. And today's trade, we saw a big cut coming in, almost 8% gone there. November 2016 level is what the stock is currently looking at. And the commentary typically from the management over the con call yesterday was not something that the analysts were looking forward for. In terms of pricing, the management sounded pretty much cautious on that. And that's a pain point for the sector right now. So what typically the commentary that was said by the management said that it expects a 7 to 8% kind of demand growth now in FY20, and this is even after the expectation of a subdued Q1 FY20 due to general elections. So it expects the demand to remain muted not only just for one quarter but also going forward as a whole for FY20. That particularly did not percolate down well with all the analysts who were looking now for a pricing recovery so that fundamentals could bounce back for the industry as a whole. That didn't come in from the management. And even if you look in the financials, on the face of it, they look like pretty good set of numbers, inline set of numbers, but then the pain point was the EBITDA per ton performance, or the unitary performance, which was down there at a multi-quarter low, indicating that the pricing scenario or the pricing power of the industry might just take some time to revisit the industry as a whole, on account of which we've not just seen Ultratech reacting in trade today, we've also seen a bunch of other cement stocks reacting to this, be it in the likes of Shree Cement, ACC, Ambuja. They too were down and out in trade by more than 3.5 or 4% for that matter.
All right, Nikki, thanks very much for that. So that's an important stock to keep an eye out too. It's another Nifty 50 stock today that has gone to the cleaners. About 7.5% down for Ultratech Cement. 3,500 is where it's trading at. I want to just quickly look at what's happening to the rest of the market. The Nifty for itself obviously weighed down by what's happening to Z and Ultratech Cement and even some of the other names, has now has been pushed below by about 25-30 odd points. That's 10,825. The Nifty has bounced back a bit, and so has Z actually. So Z, from being down about 20 to 23% from its intraday low, has come off, but is still a big heavy knock there. 18.5, 19% still under for Z. So that's one stock you really need to keep an eye out on. Should pull up the AV80 function. I mean, we're talking about the volumes picking up pace in a matter of minutes. So last time we took a check, it was about 32 million. It's already touched 40 million, and you can just see the difference in the volume as well in the trades that are coming in, particularly on the short side for Z. Futures and options also. Futures are seeing fresh shots building up into the stock at a steady rate, almost 50% change in open interest there for Z Entertainment. But we'll keep a close eye out on what's been happening. In fact, try and get you some more opinion and get you some analyst takes on the kind of pummel that has been seen in some of these names. Z, Dish TV 2 is the other one, and some clarity from the management will be sought. But let's see what happens here on.
You know, a lot of this would be akin to you know, rumors floating around and people not quite knowing. I'm sure there are some informed hands out here which are doing this.
The point being is, you know, and the news, I mean, the report that we're talking about, the Wire report, it's not a report that's come out today.
Yesterday, 24 Jan.
Yes, it came out yesterday, and it's probably just, it suddenly gets that attention, and the kind of knee-jerk reaction that such news garners nowadays has been quite dramatic. I mean, each of the time that you've seen news like this coming about, stocks have been trashed more than 20%, more often than not.
Yeah, let's wait and watch. This is Dina, the institutional holding in Z Entertainment. Oppenheimer about 6.8%, LIC about 5%, Vanguard holds about 4.4%, ICICI Pru AMC, well, they hold about 1.9% as well, BlackRock about 1.9%. So it's not been...
yeah, you have Aditya Birla Sun Life also, that's also got about 1.25% holding in the stock. So there are a lot of, actually, a lot of domestic funds as well as institutional players, you know, deep hands here on the stock. So that's...
Yep. So Z Entertainment 20%, Ultratech 7.5%, and now Grasim, the third worst loser in the session today, 764, and it's a bit of a double whammy as well for Grasim of sorts, because not only do they have to cough up or most likelihood have higher debt levels coming in for their investments or proposed investments in the rights for Vodafone, but they're holding 60% shareholding, Grasim, and that should, a 7.5% gash in Ultratech should augur negatively for Grasim as well. So bunch of these active stocks under focus today. We'll get in a battery of guests now. Firstly, Avinash Gorakshekar, quick thoughts on Z. Let's tackle that. Then we'll get in Deepak Shenoy and talk about Z, Grasim and the entire space as well. A bunch of other names too. As we said, Dish TV, Z-Learn, SL Propack. No connection to Z Entertainment, by the way, but for the fact that it's a brother's company, but that stock too is down about 11%. Avinash Gorakshekar, what do you make of the reasons why Z would have fallen? Multiple things, including a report from the Wire or the pledge shares being attributed. What have you learned?
My sense is, Dheeraj, I think the pledge share issue has possibly reached a little alarming level, and I think possibly there has been some trigger to that pledge shares which have been pledged by the management. In fact, it was a known fact that Z Entertainment promoters had pledged a large quantity of shares. My sense is that unless and until we don't get further clarity as to whether some more shares have been pledged or the earlier pledged shares have triggered some sort of a kind of a fall, I think this really clearly indicates this kind of fall obviously indicates that there has been some selling by people who had actually lent them money against their shares. So I think purely this element was always like a hanging sword for Z. And typically, whenever such developments do happen, you have found earlier examples that the stock price actually corrects pretty sharply. And, people don't look at the fundamentals or the earnings. I think the near-term concern is only on the pledged shares, and which, to a large extent also shows what is the level of, corporate governance and what is the level of promoters who are pledging. Because at the end of the day, the news flow regarding management wanting to dispose 50% of their shareholding, that point also did not get little more clarification, post the conference call. So I think today's fall largely attributable to the pledge shares, and I think until we get some more clarification, nobody is going to venture out and buy fresh. I think a 20 to 25% fall in a single session for a large cap company like Z is definitely alarming, and I think most of the institutional holders will now like to know what is the clarity on the pledge shares and how the management has actually, taken care of that.
Well, we're talking about SL Propack. Should pull up a Z-Learn also to see if there is anything that's happening about it in that stock. So that stock too, in line with the rest of the group stocks, is down about 15.5%. Vineet Bulinchkar is joining in right now. Vineet, how are you making sense of what's happening here?
Actually, all these are elements of a perfect storm that has built up over a period of time. So you had the OTT platforms, the disruption from the paper viewer, and with also valuations being stretched. Not very few quarters back, the price was at 600, plus 50. We had found it to be very overvalued then, and that has now come. And plus, with the SFIO probe being ordered and the rumors going around in the Wire article, I think across the group selling has happened. It's not only limited to Z. It is extended to the entire Z and the SL group. So all of these stocks have come up, and that is entirely to be taken into cognizance with this SFIO kind of event that has happened. And if you look at the political angle also, the Wire is like a very closely politically affiliated to the UPA side, whereas Z is affiliated to the the BJP close connections. So I think there is multiple angles that are playing out here, and because of which this entire group has lost, severe market cap erosion has taken place. Best is to wait a while, let the clouds settle around all this and clarity emerge before getting onto the stock and reviewing your decision. Definitely the valuations look good, but all these other factors are playing truant out here. So we have to look at that. There is a question of pledged shares also. So we need to...
Vineet, allow me to interrupt, because you guys might want to hear in this conversation as well. SL Propack is the other company that has fallen. I repeat, no connection to the Z Group per se, but for the fact that it's a company owned by one of the brothers, Mr. Ashok Goel. He joins us on the phone line right now to talk about this. Mr. Goel, thanks so much for joining us on the phone line. Are you surprised to see the kind of falls that have happened in all of the group companies? I mean, the reports in the Wire about how an SL Group link emerges to the company being probed for suspect demonetization deposits, etc. I know the companies are very well bifurcated and no cross holdings, etc. But what do you make of this fall?
Yeah, Neeraj, I'm as surprised as many of the people would be. But I must say that one, SL Propack is nowhere in the picture, has never been in the picture of any of these allegations. And I'm surprised why SL Propack stock is getting hammered. So I have no clue. There is zero promoter pledge. There is zero leverage even on the promoter's hand itself. Companies leveraging is clearly known. And yesterday we had our quarterly numbers, and I have categorically mentioned that my net working capital is higher than the entire global debt in SL Propack. So I don't know why SL Propack is getting hammered at all.
I guess it's just the sentiment around all of the stocks there. So any linkage of any sorts is getting punished. Mr. Goel, thanks very much for joining us and clarifying a quick clarification coming in there from the management of SL Propack. They're in no ways linked to this entire issue. They have no pledged shares as well, zero pledged shares, and that's the management there clarifying. The stock, though, however, has recovered from the lows of the day, but is still down about 11% right now, 103. Maruti, that's the next one that's taking center stage right now as it reports its Q3 numbers. Revenues have come in at 19,668. That is pretty much in line with what the Bloomberg estimate was of 19,600. We should pull up the profit figures also to see what they have come in at. The expectation was somewhere around 1,695 crores for Maruti's profit. The stock, though, has taken a slam dunk in the session. The revenue numbers, I think, are the only numbers that we have at this point, or the profit numbers, if we could have those coming up as well. Can I spot the profit numbers? We've got the net income numbers as well coming in, but not yet in terms of the profit numbers. We'll wait for the profit numbers to come in, but watch out for the margin figures. This time around, the expectation was that they would see a slight bit of a squeeze in the margins because of the declining volumes over the last few months that have overall weighed on them. Net profit has actually come in at 1,490 crores, which has come off from 1,799 crores that we saw last time around, and this is significantly lower than our Bloomberg estimates as well. Margins will be another aspect to watch out for. There had been a decline of 0.6% volumes, and that would have reflected on the revenue numbers as well. Higher discounts and lower volumes were anyways anticipated to be seen in the form of margins getting squeezed, and higher raw material costs is more likely another reason for the kind of dip that we've seen and the impact on the profits numbers as well as the margin figures.
Aditya Bapat of IIFL joins us on the phone line to talk about these numbers. Aditya, good having you. Thanks much for joining in. What do you make of these numbers? What's your, the stock is of course down 5%. What is your initial thought?
Yeah, well, I feel that the cut in the stock price is justified. That's because these numbers are certainly disappointed quite a lot. I mean, on the revenue front, it is still okay, but as far as the operating performance is concerned, it's been a huge disappointment. So, yes, in my opinion, the cut in the stock price is justified.
Just a 2% uptick, though, of course, the expectations were the revenues would be up about just 1%. So that is one thing. Margins were expected at about 13.4% versus 15.8% as well. What do you think are the factors, Aditya, that have led to this performance? And again, the part two would be the reaction in the stock, right? People kind of confuse the valuations with the fall in the stock price. The fact remains that with a 9.8% margin versus the expectations of 13.4%, it is just so disappointing that you don't know when the resurrection on the margin front will happen.
Yeah, well, what you said is actually right. The single-digit EBITDA margin for Maruti is something which is certainly very, very disappointing as far as the street is concerned. But we need to, take one thing into consideration that, the company, I mean, the demand scenario continues to be weak. And at the same time, the company has taken quite, I would say, heavy discounts as far as, selling its models is concerned. So, yes, the operating leverage has been really weak and it has been affected during this quarter. So, all in all, I would say that, yes, the quarter is really, this quarter performance is really disappointing, no doubt about that. But, we need to watch out for the management commentary and, the way ahead for that. So, it's not as if everything is lost.
So, is it a buy at these levels, or would you wait for the management commentary and then decide?
No, I would certainly wait for the management commentary.
Okay, fair call.
It's interesting, Neeraj, because on the expenses side, even if you were to take a look at it on a quarter-on-quarter basis, the numbers have actually come off in terms of the cost of raw materials.
Yeah, but still a 9.8% EBITDA margin number leaves a bit to be desired. Fair call. Aditya, we'll leave it at that. Thanks so much for taking the time out and being with us. Appreciate your time. We'll get in our other experts in a bit, but I'm told that one more expert on Maruti is with us. I believe Ankit. Okay, I think we'll get him in just moments from now. But this says it all, right? One, the kind of revenue numbers, the fact that margins have come in at 9.8%. And I remember talking to Yatin in the morning, and Yatin will be joining us in moments from now. But I was talking to Yatin in the morning and asked him what was the single most important number that he would watch out for. And he had mentioned that if the margins come below 13.4%, then that's a problem. The fact that the margins have come well and truly below 13.4%, would make two things, make people wonder on two things. One, not just that the revenue growth is low, but for India's premier car company, the reversion to mean, when does that happen? Because that is essentially the big thing. I remember, Devina, 4 months ago when R.C. Bhargav in a press conference said that we'll try our best, but we don't know if we'll be able to maintain that 10% run rate on growth. People had still not accepted that this can happen. Now it's starting to show in the numbers, and arguably Maruti's press conference, not just from a Maruti perspective, but from a perspective of how demand might be on consumer facing rural products, becomes extremely important. Net profit down 17%, margins single digits, revenues grows only about 2%. This is this is not a good sign.
There are certain losses that have come in, in the other comprehensive income portion of their announcement. So I think there is a 55 crore loss, which was not there last time around. From another obligation, and there is a loss on change of fair value of equity instruments to the tune of 186 crores, which is around closer to 86 crores more than last time around. So there are a few sum of parts which are adding up here. Yatin, what have you picked up?
Let me take you through the review, Devina. We were expecting, sales to be higher by 1%. The sales have come in higher by 2%. But the surprise on the negative side is because of the lower EBITDA, which came in at 1,930 crores on an absolute basis versus a figure of 2,620 crores. Net profit also has declined by nearly 17% to come in at close to 1,490 crores versus the expectations of close to 1,700 crores. Now, if you look at the margins, they have come in at sub 10% at 9.8 versus the street expectations of 13.4. And more importantly, we need to watch out for one-offs here because the management in the press release has mentioned that during the December quarter, because of the lean period, because of the failed festive season, Maruti has helped the dealers to sell 90,000 units higher than the wholesales, which means that there will be various billing differences, there would be various sales promotions that they would have done, or various dealer costs that they would have absorbed during the quarter. So if that is one-off in nature, probably there could be some adjustment to the margin. More importantly, if you look at the other factors which have impacted the margin, is the raw material cost. As a percentage of net sales, your total material costs are at 74% versus a level of 70% last year. So 4 percentage points increase there. Employee costs have also increased significantly by 100 basis points as a percentage of sales year on year. Of course, the other factor that the company has mentioned in the press release and the presentation is that the adverse commodity prices and higher selling expenses have hit the profits. Not only that, we have the new WagonR which has come in on a new platform. So the company has said that the new launches and the new engines have led to higher depreciation and higher costs. So there would be various, one-offs or probably one-time expenses that the company would have, most likely done in the December quarter, and that's clearly reflecting in the, operating performance, which is quite dismal. So, the management conference call starts at 3 p.m. and we would get more clarity as to what were the one-offs or, what were the foreign exchange or changes in royalty payouts. So all of those details will probably come in the, call.
Okay, so that's Yatin's initial thoughts, and I'm sure Yatin would probably have some questions as well. But we've got a couple of experts too. Ankit, merchant of SMC Institutional Equities, with us on the phone line, as is Mitul Shah of Reliance Securities. Ankit, let's start off with you. What did you make of the numbers?
See, certainly I'm disappointed on the EBITDA margin front, and as it was rightly been discussed by the other guest also. So yes, a lot of pressure has come on the raw materials on the raw material front. Second, the depreciation has also increased because of the 2 new models which was launched. Also, I think there was a lot of costs associated with the launch of 2 vehicles, that is the new Ertiga, and I think the management was also quite preparing for the WagonR. So that has also impacted. Also, what we have seen, there are a lot of discounts being offered in the new models. In fact, most of the new models were offered at a very, very low price in the month of December. As far as my channel checks has been concerned, the inventory level is still close to 45 days, in the system. That will also take time. So yes, pretty disappointed looking at the numbers. There has been adverse effects of the forex also. That is also, one point to ponder. We'll have to look at we'll have to listen to the management commentary why it has happened. And yes, the exports, we know as far as we know, this is down close to 23%. So that has also impacted the volumes, and we need to really understand that the EBITDA margins from here, how will the
trajectory be? Yeah. That's true. No, that's a very valid point, and maybe I'll pose that question to Mitul Shah as well. He from Reliance Securities also joins in. Point one is trying to analyzing what's gone wrong or what's not worked. Point two would be, what is the commentary that you would want to hear from the management? Mitul, is it around margins which have slid into single digits? Is it around volumes or revenues which up 2% are seemingly in line with estimates but a very low number? Or is it about what do you think the management can do over the next couple of quarters? What is the most important element in commentary that you would want to hear?
See, most important factor here is the margins, as volume numbers are already out and most of the companies have indicated slowdown. But here, if we analyze this quarter in detail, roughly there was a difference of around 16 to 18,000 units in terms of the WagonR this year versus last year. So basically, phase out of the old WagonR has impacted volume to the tune of 4.5%, which we believe that with the new WagonR coming in, it would be at least 5 to 5.5% incremental volume growth for coming quarters. So that is already kind of addressed by company by launching new models. Revenue also more or less in line with the estimate. But certainly margins were roughly 400 basis difference between the estimates and what they have reported. So we need to see clarity on the from the management in terms of whether anything one-off in terms of the extraordinarily high discount for particular category, or is there anything one time in terms of the bonus, because employee cost has also gone up, forex thing is also negative. So how those things will play out in coming quarter, that will be key factor for Maruti stock performance.
All right, gentlemen, we'll leave it at that. Thanks very much for joining and appreciate you taking out the time. Deepak Shenoy of Capital Miners joining us on the show right now. And Deepak, let's start off first with Maruti, and then we'll talk a little bit more about the bigger disruptors on the index today. But let's take a look at Maruti and the disappointment with regards to the profit, the margins especially, single-digit margins now for Maruti.
Yes, I think this quarter would have obviously been a little bad. They've indicated this earlier. They have also been I think reports earlier also of the channels not being able to take more inventory. I believe some part of it is also because of the higher insurance costs, the fallout of that as well, and perhaps the way the models are and the new models are coming, I think now or in this calendar year is where some of the inventory will be moving to going forward. However, as much as that is said, I think small car penetration in India is still low in comparison with the kind of demand that exists, and I believe once some of the NBFC crisis areas go away, much of the auto financing woes go away, and later in the year when the insurance impact and increase in price correspondingly has therefore settled down, I think we should see better numbers. The numbers will look bad or are looking bad right now, but I'm still a long-term buyer in Maruti. As a disclosure, I own some of that stock.
All right. I'm just talking from a quarter-on-quarter perspective. I mean, while we're looking at the other income component, that seems to have gone up from the last quarter onwards. Aside from the fact that the sales itself has come off, but the other income has gone up. The total expenses has come down from last quarter. So, this clearly looks like to be an overall issue with the operational issue they're coming in. The stock now not getting any sort of respite, about 9% lower. What do you think is worked around this time around for Maruti, and how do you think that shareholders now are likely to see, are you going to see more selling pressure building up in coming days?
So we'll have to see a little more. I think there's a conference call later today, and also just take a look deeper at the numbers in the presentation. I haven't had a chance to look at it yet. So I think I'll reserve deeper comments for afterwards. Though at this point, I still feel this is probably something that, in a result perspective, the bad part is more or less expected. We saw it from the numbers on sales, and I still continue to feel that while the sales have been low, I think it's a temporary impact, and this will get corrected moving forward. Having said that, there may be some more information emerging from the conference call and from the presentation, which I don't have. So I reserve the right to change my opinion. But nothing right now tells me that this stock is worth a complete sell. In fact, a lower price might still be attractive.
Okay. 8.5% though. Deepak, just wondering, got to talk about, and we also have a technical analysis, but got to talk about Z Entertainment as well. But, just wondering whether you reckon that autos, whether fundamentally or because of the sentiment prevailing around, would continue to slide or not move up. I mean, Ashok Leyland, and I know it's a wrong way to look at a stock that way, that it's from 165, it's come down to 85 or 84 or 83, and therefore is hard, because that means nothing. The valuations may still be not as reasonable, but that has come off. Tata Motors closing into 150. Maruti Suzuki sub 6400, 6300 or thereabouts. It's not looking pretty. Will it continue to remain dull? And even if it might be a good buying opportunity right now, do you think there could be a time-wise correction into these names?
Well, I mean, you don't need a time-wise correction. There's been a price correction already. So, you know, from the angle of where autos are, Neeraj, I think the auto cycle will revive only once demand comes back, and demand on all fronts, CV, two-wheelers and four-wheelers has been, you know, benign or missing really in action in the last 3 months, last 6 months nearly. And some of it is because of regulatory changes. We've had axle load increases coming for CVs. We've had insurance increases for two-wheelers and four-wheelers, which is between 5 and 15% of cost. So there has been a change in that. There has been financing issues because of the NBFC crisis. Most of the lenders to auto are NBFCs. We do feel that while the situation does call for, you know, some attention, I don't think these issues are permanent. I think much of the effect of the NBFC and insurance and axle load norms will wean away towards after Feb or March, and most likely after that we're going to start seeing demand also, because the Supreme Court order says BS6 is going to be required after April 2020. BS6 adds a significant cost, so to beat that there will be pre-sales done later this year perhaps, and early next year. So anticipation of demand continues to remain strong. There will be a backlog because of the lack of orders in the last 6 months. There will be a bit of a backlog that will kind of stuff the channels as well. So I think we should take that into consideration. CV cycles, we've seen a 5-year up cycle, but I think there's a long way to go ahead in that. And I also feel India, you know, as if interest rates were to come down, as they might, then there will be another fillip towards buying auto. So, but it's not for the faint of heart. So next 2-3 months, imagine you've lost 30% of your money. But if you're not in for the short term, this is probably still a sector you want to look at.
Just reading out from the media announcement from Maruti, they've suggested that the quarter had several adverse effects coming in the form of commodity prices, foreign exchange rates. The marketing cost and the sales expenditure were on the higher side, and there were higher costs in resources and capacities which were earlier planned to enable a higher estimated growth. So those are a few factors that were cited as adverse factors which impacted profitability for Maruti Suzuki, which is now down about 8.5%. We've got some more numbers coming in there. So you've got DHFL posting a profit of 313 odd crores. That's also a dip from the same quarter last year. 495 crores was their profit at the same time last year. The stock, though not reacting a whole lot much, though coming off the highs of the day, but once again borderline, so flattish, 207 on the counter. Deepak, while obviously we're talking about the entire auto space, just comment on what you're seeing for Z and today's session and the violent reaction in all of the companies related to it.
Yeah, we haven't really found any. You know, I am not invested in any of the stocks at the moment, so I don't have any pre-information on any of this. So we started looking for it after the stock fell. I haven't found anything, you know, other than the news report about some notes on demonetization or something like that. And they're also looking to sell stake in these companies, I guess, which is something the promoter has stated a while back. I don't know why that should, you know, wait 2 months to take the stock down. It should have taken it that day, but you know, it's not done that. So I don't have a real solid picture in there, but the promoter group has some entities which are highly leveraged, including the SL Infra plays. And therefore, they have been looking at trying to deleverage those entities and pay back the debt on those entities. And I know that perhaps that was one of the reasons, and I know that it's not the stated one, but it's probably one of the reasons why, you know, liquidity challenges persisted in for them, and perhaps any infusion of funds by selling their stake in the non-leveraged entities would have helped them. So perhaps that, you know, something around that has come to light. I have no concrete news on this. I'm a little surprised, But at this point, such a sharp fall, I would wait before I jumped in to buy to confirm what's happening here.
Okay. Let's welcome our technical experts as well. They've been waiting by. It's just been that kind of a day, a manic day. Amar Singh of Angel Broking with us, as well as Brijesh Singh. Gentlemen, we'll have to play a bit of a rapid fire because Maruti is about to start its conference call. So I'll take in very quick thoughts from you. Can't really get into detailed explanations. Amar, a call on the index first.
I would say that overall index, we are seeing selling pressure at higher levels, and index is unable to, Nifty is unable to sustain above the 10,900, 950 mark. So that's a level where profit booking is also happening, and fresh short positions are also being created. But overall, I would say that till the time we don't see a breach below 10,650, 700 zone, I would say that the bias remains positive.
Okay, Brijesh, quick thoughts on the index. Are you taking a trade right now at 10,777?
Good afternoon, Neeraj. Yesterday also I have said for 11,000 Nifty Delhi abhi dur hai Nifty ke liye. Same thing I would be maintaining. If anyhow, if we are closing below 10,850, we are heading for 10,700. Even 10,640 can be seen on the chart. So if someone wants to go for a short now at the present rate of Nifty trading at 10,773, keep a stop loss of 10,850 and play for the target of 10,700 and 10,640.
Okay. Specific stocks, Amar, one top trade.
I would say that one can look at Aurobindo Pharma. This continues to remain positive, and overall the trend remains positive for this stock. Technically, looking at the short term as well as the medium term trend. So one can look at buying Aurobindo Pharma close to 780 levels with a stop loss of 761 and a target of 818 on the upside.
What about you? Your top call, one top call?
Lower high formation has been there on a shorter term time frame of chart of the Apollo Hospital. Right now the stock is quoting at 1297. Somewhere around this rate or 1300, one can go for a sell side with the stop loss of 1345 and play for the target of 1255, 1260. Even the target can downside we can see 1210 also. Time frame to hold this counter would be 3 to 4 trading session.
Okay. The short calls are certainly paying off for a bunch of stocks. I wish some of the people have made use of BQ Edge that we present every morning, Devina. A shameless plug, but yeah, frankly, I just have to do it. Quick couple of calls again on stocks that have moved the most. Amar, Maruti 6500, would you trade it?
I would say that Maruti, overall the trend remains weak for Maruti, and if you look at the weekly charts as well as the long-term charts, there is some selling pressure. I would say the earlier lows, the stock has got very strong support coming at around 6,500. These are the current levels. So 64 to 6,500 is a crucial support zone. So I would say that we could witness some bounce back, but the trend for the stock remains down.
Okay. What about Ultratech Cement, Brijesh? 8% lower, 3,500. Would you short it?
Overall, the trend of the chart has been down only. At this juncture of 3,490 or 3,500, still I'll go with the sell side. Weekly charts are suggesting downward channel till stock is not giving closing above 3,700. Any rise should be used for a selling purpose. Downside, we can see a stock touching 3,100. Even 2,850 can't be ruled out.
Okay. Fair call, gentlemen. Thanks for your call. Stay on. Lots more to talk about as we speak. Some of the others like Hero MotoCorp, etc., too have fallen, and Z is now trading at the lowest point of day at 325 rupees. I don't remember when was the last time that I saw so many stocks dipping so much on a single day. You know, you could argue that there are times when Yes Bank would have fallen 15-16% and you've seen double-digit falls. Yeah. But
just
Z
look
is
at
down.
the top 4 losers on the index.
Yeah.
You should just pull up the top 4 losers on the index. You know, in the order of the kind of cuts that they're seeing. So stacking up first would obviously be a Z, followed by an Ultratech, followed by a Maruti, and all of them have some bit of news attached to it. So
and there is collateral damage on others like Hero MotoCorp, Grasim, and the others have certainly fallen off too. Deepak, Shenoy, you know, we've discussed Z and Maruti. Ultratech is the other one, right? 1.5% lower, 8%. Their commentary around pricing, the slight lack of confidence that seemed to come about in the note as well or on the conference call too. What do you do here? Everybody, I mean, cement is that one space where people are divided right down the middle. Some people believe the pricing power is gone. Some people believe the valuations are so cheap, go out and buy it. Ultratech's commentary is giving evidence that the former is right?
Well, Ultratech's not a cheap stock, so falling 8% for it would just bring it into not quite as expensive but still expensive territory. So I believe some of the good things about what they're doing with their acquisitions and their efficiencies are still good for them, but the price is very heavy, and you're not in a position to substantially, unless there's a massive increase in infrastructure immediately. I don't think the demand has increased quite a bit. So I doubt any assertions on any pricing pressure when the demand pressure is coming down. So at this point, I think one would have to look at lower levels for a long-term buy, and I certainly feel that while there are family investments in the company, more longer term in nature, but I don't think I'd be a buyer at this price. I'd just wait. The cement cycle will start again at some point, and then maybe then it's the right time to buy. They have some very good investments that they will turn around.
Right. All right, gentlemen, you'll have to just hold on. We'll come back to you prior in just a few moments. The Maruti con call has started, so let's listen in.
Dealers retail about 90,000 vehicles in excess of wholesales to keep dealer inventories lean, as the festive season sales growth was below expectation. Volumes were affected not only due to weak domestic market conditions, but also due to issues faced by export markets. Automobile business is highly capital and labor intensive, and volume plays a critical role, especially in a growing market where the business planning is expansion oriented. When the business planning is done, assuming some growth, all growth enabling expenditure increases proportionately. If, due to reversal in market demand, the volume does not grow, the impact of increased expenditure is visible in financial performance. Besides weak market conditions, this quarter was also marked by several other adverse factors. The commodity prices and foreign exchange movements were also adverse during the quarter. During the quarter, the company sold 4,28,643 units, lower by 0.6%. The company registered net sales of rupees 1,89,264 million, lower by 0.1% over the same period previous year. The combined effect of decline in volumes and its scale disadvantage, higher sales promotion expenses, adverse foreign exchange movement, and commodity prices impacted the profit for the quarter. Cost reduction and higher non-operating income could partially offset the negative impact. Net profit stood at rupees 14,893 million, lower by 17%. While Q3 financial year 19 was an exceptionally challenging quarter for us, it will be our constant endeavor to enhance sales and improve productivity and efficiency in the future. The company has launched two new models, Ertiga and Wagoner, to create excitement in the market and bring volume growth. Both these models have been received well in the market. Ertiga has been in waiting list since its launch. The company also announced price increase across models to pass on some cost impact. We can now take your questions, feedback, and any other observation that you may have. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'd also like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 per participant. Should you have a follow-up question, we request you to rejoin the queue. The first question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity. So if you can throw some light on the recurring and the non-recurring nature of expenses related to the forex side, or rather, whatever is the forex-related expenses which is pertaining to the previous quarter, which you have accounted for in this quarter as part of the royalty payout or as part of the vendor settlement. That will be the first question, sir.
So, see, there is only one exception that I see in this quarter, that we had to make certain provisions for leave encashment and retirement benefits because we had done a wage settlement, and that has an impact on the past services as well. So there was a provision made on that account, which is about 48 crores. So that's the only item of exception that I see in this quarter.
And forex-related adjustment pertaining to previous quarters on account?
No, there is virtually negligible.
Thank you. The next question is from the line of Ashish Nigam from Axis Capital. Please go ahead.
So this QOQ margin fall of 500 bips, can you quantify how much is commodity, how much is currency, what is the discount, and how much would be operating deleverage?
If you compare it with Q2, you find that the net sales have come down. So other expenditure, if you say on an absolute value, it is down by 100 crores as compared to Q2, but as a percentage of net sales, you find it up by 1.5%. So that's the reason of volume versus the nature of expenditure. Other than that, commodities compared to year on year had an impact of about 300 crores. And effect of foreign exchange rate is roughly about 0.7% on the margins.
And which of these cost pressures reverse in Q4 or Q1? So firstly, what's the price hike we've taken early Jan, and does that cover at least part of this 500 bips margin fall?
So there will be combination of factors next quarter. One, of course, the price increase that we have taken will help us in Q4. We also are seeing that the commodity trend is now reversing a little bit, so we may see some respite and advantage coming out of that. Discounts this quarter were also all-time high, so I think we will be at much lower discounts compared to where we were in the last quarter. So I think combination of all these factors would definitely help us moving forward in terms of where we are and where we will be.
I'm just saying because we've typically worked in this 14 to 16% margin band. Is there a rethink of that band?
So as we said that this was an exceptional quarter, and all the negatives came to us in this quarter. We had impact of foreign exchange, we had impact of commodities, we had also a very high sales promotion because the retails were very high, and therefore it's clearly visible on the wholesales. We also had as I mentioned to you, some impact on the employee costs as we had one wage settlement done, and second we had one-time gratuity and leave encashment where we had made a provision of about 50.
Hell.
All right, I think we've lost the line there of the Maruti management, but making points that I'm trying to clarify what exactly got to them this quarter. It was an exceptionally weak quarter, and there were various factors like the management highlighted that affected them negatively. It wasn't a good festive season. They had the commodity prices impact negatively. 0.7% impact on the margins were also because of what happened to the currency. Employee costs went up. While the sales in the festive season were disappointing, nonetheless, the push given to dealers and the discounts that they gave also added that additional pressure, which weighed down on the margins and got them down to about 9.8%. But he did highlight that commodity prices are reversing, and hopefully this is not something that you will see come the next quarter. But the stock price, though, at a 52-week low for Maruti Suzuki, no respite, back down to about 8.5%. So 6,484 had gone to levels of 7,400, 7,500 just a few days ago, and this is not good news.
Yeah, not good news. Unfortunately, I was just trying to get to the point wherein he would have answered about whether they are rethinking the margin band of 14 to 16% or no. The line just got disconnected right there. But, well, he's okay. Maybe just cut across. I think the management is still speaking.
When you're talking about higher resourcing and higher fixed costs in expectation of higher volumes, was it just a quarter 3 temporary phenomena, or is it like that if volumes do not meaningfully improve, those fixed cost pressures will continue to be seen in 4Q and next year as well?
So as an
Okay, I think we're just having bad luck with the line. Nevertheless, there is a market beyond Maruti that I think we need to address as well, because lots happening. There are some gainers as well. The Bharti twins are up and about 6.5% for Bharti Infratel, and Bharti Airtel about 2.5%. Yes Bank has given up the gains, but still up about 2.5% if I'm not wrong. Yeah, 2.5% at about 220. So that's not doing all that poorly too. But Z, Maruti, Ultratech, that remains the top draw. Hero MotoCorp has fallen 2.5%. I think 4.5% as well.
But you know, it's really a sentiment-driven move, because in another situation where probably you wouldn't have seen stocks crash the way they have, most of the other names, the gainers would have had far more gains.
Yeah.
It's probably the sentiment that drives even the gainers to give up some in intraday trade.
Okay, sorry, just as you were saying that, I was looking at the sentiment-driven fall. Look at Dish TV. It's down 33%. 22.5 rupees for Dish TV in the session today. Liquid name and correcting quite strongly. KPIT Tech, okay, there are different reasons. SL Propack, the management saying that they've got no connection whatsoever, no promoter pledges, no group company relation, nothing. And that too is down about 14% in trade. So it's looking very, very wobbly. Praj is down about 7.5% too. Lancelot Tikana of ValueX with us as well. He's been waiting by patiently today. And Lancelot, thanks so much. But just one of those days wherein it was very difficult to, kind of do justice. Just talk about these. Z's fallen, but the related companies too, which are highly pledged, have fallen. And then we'll take in a final thought from Deepak Shenoy and let him go. He's been patient with us today as well. But Lancelot, a word on a Dish TV or SL Propack or some of the other group companies.
Well, these are, one is sentimental, as well as I think the investors now give a lot of weightage to corporate governance and good corporate governance practices. And as we've seen in other companies as well, wherever there are, violations of, or there are signs that corporate governance may not be as, as the market expects, you see investors, running to exit these stocks. So I think, while there might not be anything serious, which we still don't know, but at the first sign of any violation of any kind of corporate governance, I think investors' first reaction is to dump the stocks, rather than stay and find out what's going on.
Deepak Shenoy, one final comment from you before we let you go on the happenings of today's trade. And aside from that, from a slightly medium-term perspective, what would your investments look like?
So, Tanveer, I think the markets, this is actually weird because we're looking at markets behaving like there's very little liquidity, but it seems like the selling action is very, very pronounced. There is no buying action at all. So it appears that the big buyers of the past have stepped away, and the selling pressure is relentless. Whether it is speculative selling or selling by a fund is not relevant. It's more a fact that any bit of bad or even slightly negative news is enough to take down a stock. This is a good time for someone who's looking to build a portfolio and does not mind the kind of price damage that might happen in the near term. But you have to brace yourself. 5-8% falls is not something we have seen in the recent past. So somebody who's entered the market recently is not going to like it because in the last 2 years we haven't seen something like this happen in such cavalier fashion across the enterprise. We're going to see more of it, I feel, and therefore it's a good time to build portfolios, take long-term bets on stocks that are perhaps collateral damage in what's action that some other stock is seeing. So it's a good time to build portfolios, though. If you're a person who's already built his portfolio, I'd say wait, find the players that aren't doing well because corporate governance is really, really bad, or you don't think there's any hope of recovery, but you probably will get better stocks at much better valuations than you thought earlier. In general, this is not a time to panic and sell. That's what my feeling is.
All right. Just actually looking at the market depth for some of these stocks. Deepak, we'll let you go on that. Thanks very much for joining us. Appreciate your time. But, while obviously when you look at a Z, it's a heavily traded stock. Dish TV is a heavily traded stock. But a stock like Zealand, that trades about 14,000 shares, and on that, the stock's given up what it has. SL Propack trades 4,000 shares. So it's a very shallow market. There's nothing much that you can take out from it. Today's session, though, volume activity is much, but if you take a look at the book and the bid and the ask side, fairly shallow. SL Propack Dona up, down 13% even after management clarification, about 101 on the stock.
It just shows the sentiment. Okay, we've spoken about so many stocks which are down in the dumps. Maybe get our chartists to talk about some stocks which are doing well as well. Amar Singh, what about Bharti Infratel? If you by mistake went long yesterday, or maybe you went long yesterday on intent, would you take some money off the table looking at the fact that the market too is looking a bit skittish?
I would say that Bharti Infratel, we are seeing some volatile sessions here. From 260, it's gone up to 300 and then again around 280 levels. So one should definitely look at booking profits around, because at around 280-85 levels, that's a level of resistance. So if someone is long, one should definitely book profits around those levels.
Okay. Dana, the other thing is, just before I take the next chart check, I also wonder what does this do on the ask on the remaining companies for delivering the results, because we hope corporate-facing banks turn out with good numbers, but Maruti usually delivers numbers. I don't think people would have anticipated a 17% drop in profits. 6% was the average.
And do you paint the rest of the auto companies with the same brush?
Well, the numbers will show at some point of time as to whether there are pressure points or no, but this certainly puts the ask for the numbers for Q3 at least at a slightly higher footing as well. Dish TV, Brijesh Singh, any thoughts here?
I was looking this chart on a monthly basis, if I'm not mistaken, 2013, 2003, 2008, sorry, the stock made a low of 12 rupees. And after that, it has been moving up. Now, on a monthly chart basis, the stock, had made a lower high. The stock has been going correction from a level of 120, and right now it has been trading at somewhere around 22 rupees. The previous swing low was somewhere around 39-40 rupees, which was made on 2013. If anyhow we are closing below the level of 30, might be we are heading towards the level of 12 rupees also in coming days to see.
Okay, that's
ominous?
Almost. Yeah.
Is that the term you're looking for?
Blowing the death knell for the stock. But nonetheless, what else, Lancelot? Is there anything that you've spotted that you would want to highlight over the last half an hour of trade?
I think, while Maruti did come out with difficult numbers, but we've seen some of the stocks, sell off. But there may be opportunities to buy into some of these stocks, maybe at little lower levels, because then valuations come off. Like for example, if you take Hero MotoCorp, the company should do well going forward. Valuations are down to 16, 17 times earnings, and it is in a segment where it still has growth potential, and costs can be kept under control. As far as the management is concerned, we are seeing good amount of cost control measures, which is giving some impact on the profitability. So I think there will be opportunities to look at stocks that are having a sentimental impact because of these sell-offs, like Hero MotoCorp, and that's something which you can look at.
All right. That some takes coming in on stocks from Lancelot Economic. In fact, my producer just tells me that this drop on Dish TV of about 33% has been the biggest drop ever since listing for Dish TV. So it is a pretty ominous day for the stock. 22 rupees on the counter and dropping fast.
Well, this is no loony company. I mean, this is one of the largest DTH operators in the country, which has gotten pummeled out of shape. So, yeah, really poor. ZTV, by the way, is ending 26% lower.
Learn has come down to 20.
Yeah, and I would presume, Dana, that even 26% for Z would be the steepest fall that it has seen.
Yeah, 26.8, I think, was the one that it had in October 2008.
Okay. So, this is the second largest fall since listing for Z as well. Dish TV, the largest fall. Maruti must be the larger falls in some time now. Ultratech must be the largest fall in some time now. Adani Power has lost about 5% too. I have a list of losers. And by the way, look at what's done to sentiment. Tbs Motors, which actually came out with a really robust set of numbers, is down about 5% too. The two-wheeler space has been smashed out of shape.
But TCS, just the day it reported numbers, one day it had a decent run. Post that, it's been TVS Motors.
Yeah.
It had a spate of down days.
Yeah, it certainly has had this. The two-wheeler pockets and actually closing strategies from both our technical experts before we do more conversations with Lancelot. Amar, your top closing strategy, and if you have a view on any of the two-wheeler names.
I would say that Reliance is one stock one can definitely look at buying, because today also the stock has held, and technically Reliance continues to be extremely strong on various time frames. So Reliance is one stock one can look at. So around 1235, 1240 levels one can look at buying, with a stop loss of 1217 and a target of 1290 in the short term. And in the two-wheeler space, one can look at, if you look at TVS Motors, what we are seeing here is that the stock continues to correct, and technically the stock continues to be weak. So any pullback in this stock can be used as a shorting opportunity. So ideally, a good level to short is somewhere around 510 levels with a stop loss above 520 and a target of 485 on the downside.
All right. Just want to quickly get in Lancelot. While we're talking about large caps and result reactions, one big name reporting numbers today is Larsen and Toubro. Expectations are a 15% bump up on sales, 27% bump up on the profitability. Margins are expected to see a flat to marginal expansion. But if it does not beat expectations or even meet it for that matter, you may see the same fate being played out for Larsen and Toubro. What have you factored in for L&T, Lancelot?
Well, I think L&T should come out with better numbers. I think the growth in the order book should be at least 15 to 20%. And while I think execution might get a bit delayed, so I'm not very, bullish that everything will get reported in terms of revenue for this quarter. But I expect, if you look at it from an annual perspective, I think that 2020 should be a good year for them, because a lot of the orders that they've got this year will actually get translated into revenue over the next year. So given that outlook, I would be still bullish. If the price does come off, then it does become an attractive option to buy into, because for the last 1 or 2 years, L&T has actually been restructuring itself so to make its asset light. So they've sort of liquidated a lot of assets. They've sold off or listed companies that were subsidiaries, and now the working capital cycle is also improved, and you see the return on equity growing. So I think with that in mind, one should wait for the results, and if it does sell off, because maybe quarterly numbers may not be up to expectations, it will give an opportunity to buy it for at least a year ahead. Okay.
Watch out for primarily in terms of management commentary on their revenue guidance and their order inflow guidance, if at all there's any change on that. They've given a guidance on the order inflow at about 10 to 12%. Whether they revise that range, keep it the same, or bring it down, that's something you need to watch out for. And even in terms of the revenue guidance of 12 to 15%, if at all there is any sort of a tweak on that front. L&T though has come off too from where it was trading closer to about 1420 odd from those levels just a few weeks back. The stock has now come down to a level of about 1283.
Okay, Brijesh Singh, your top closing strategy, and if you have a view on a closing thought on any of, actually, okay, I want a closing thought on Z, which is down 30%.
Not break 310 odd level, and if I'm not mistaken, more than a 23% correction has been seen in a month, or say in a day actually. Anyhow, 310 goes, then 310 would be acting as a resistance, or even on the higher side till the stock doesn't give closing above 345. Chances are that the stock is heading for the level of 250 in a couple of days, or say in a couple of weeks. So right now 294, if I'm not mistaken, or say as I've been talking about, when it was 300, now it is 292. So keeping a stop loss of 310, look for the target of 250.
Gentlemen, stay on. We'll just get in some final thoughts from you post-close, but let's start wrapping up the markets. This headline number doesn't quite show how bad the markets have been today. We don't usually say this. We usually say that the headline numbers hit the volatility, but today the headline number is hiding the ugly side of the markets, at least on the large cap. And the mid caps have fallen more than the large caps. By the way, the headline numbers, the indices, will come up on your screen as well, because they were 0.5% when the markets were flat. So I think the BSE mid cap and the BSE small cap indices, significant correction in the market would have looked terrible. But let me bring the ugliest part of the market today, and that is frankly because it's happening in the large cap space. A lot of mid caps may have fallen more, but I don't remember the last time I saw the top 5 stocks falling the way they have. This is the green, which is fine. Let's just take the camera down and talk about the stocks which have fallen the most. Just ignore these, because there are a few stocks which are holding out. But look at these. Look at the losses here. Z Entertainment, 30%. Maruti Suzuki, 7.5%. Ultratech, 7%. Two-wheeler names like Hero MotoCorp, 4.5%. Grasim, about 3.5%. Collateral damage because of Ultratech. Adani Port, Mahindra & Mahindra, Asian Paints down about a couple of percentage points. ICICI Bank, the big boy, down about a couple of percentage points. There's just carnage out here on the street, particularly in the SL Group stocks. All of them have been beaten down without exception. Devina, yes, saying that it's bad is an understatement, but just the fact that the indices, headline numbers are just down about 0.5%, just not quite showing the ugly side of the market today.
It isn't, because I guess a stock like Z doesn't hold that much more weightage on the index to pull the index down to that great an extent. But in the mid cap and the small cap end of the market, it's complete carnage. And you run short of words to describe the fall that we saw in the second half of trade today. But look at the names that have fallen. And Dish TV finally going to be shutting shop with a 35% cut, the worst drop ever since listing for Dish TV, and for Z as well. It overtook its October 2008 drop of 26%. Graphite India, second day on a trot, the stocks looked weak along with an HEG. So both these counters in yesterday's session shaved off about 7-8%. Today added on another loss of 8 to 11% individually. You've got a TBS Motors, and we're talking about how this stock has actually done well on the earnings front, but one day of good gains and then it's all washed off. Indiabulls Ventures, Prestige, these are some of the bigger losers. Gainers though, Edelweiss was up about 7% when we started off the show. That gave up a bit. Group Finance about 2.8%, but it's probably not about the gainers today. It's just about the losers.
Completely. Maybe the small caps, if you can pull them up as well and just see what's happened there too. I mean, but yeah, the cuts are probably not as bad, because the cuts were a lot more in some of the more liquid names. But look at that, Ujjivan, we just spoke to the management today, down about 5% in trade. Jet Airways about 4.5%. Rain continues to slide lower. Shankara, after the 5% cut in in yesterday's session, down on the 4% too. So the picture
actually,
not that great.
we didn't have Z Learn, Z Media, SL Propack in the list.
Yeah, maybe we should pull those stocks up individually, because that's the clutch of names.
Yeah, so how they've actually finally ended the day. So if we could have Z Learn, Z Media, and SL Propack, I'm sure. I mean, the losses would have just exaggerated by the end of it. So 20%. That's
but today's fall is about 20%.
Yeah.
And 24% this week. But yeah, that is Z Learn, about 20% lower, Devina.
And SL Propack 11%. Management came and clarified they don't have any pledge shares, but that doesn't do anything much when the sentiment itself is so weak. So that's down 11%, and I think a Z Media another 11% lower in the session.
It just looked ominous for a clutch of these names out here. That's the best way to describe this. Let's see. The sentiment to the hit to sentiment is very high, more than anything else, because these are fairly popular names, widely held. A lot of people would be holding some of these names as well. And
let's take a look at the volumes. Actually, I'm sure that they would have gone through the roof as well. So if you could take a look at the turnover figures,
this seems off.
All right.
The F&O volume seems off. Maybe the cash market volumes are all right. 34,000 crores, but yeah, the F&O volumes seem off.
Let's take a look at the weekly performance then for the index, as well as what the mid caps and small caps have done. And the weekly performers will come up. So this is the Nifty 50 weekly performance, 1% shaved off. Though the surprise mover this week obviously has been because of yesterday's move, Yes Bank, which stands tall about 10-odd%. Sun Pharma managed to recoup most of those losses that we saw it face when the second whistleblower report came out. Reliance Industries has helped support the index, so without probably a few of these large cap names, that number on the index would have looked worse.
Yes, indeed. And well, Z Maruti, the story is known. The mid cap and the small cap indices, if we can just quickly pull them. Well, Sun Pharma Advanced Research has gained a little bit, but yeah, I mean, Info Edge a little bit, Emphasis a little bit. But look at the losers there again. HEG and Graphite India. In all these conversations, we missed out those two. That's been over a 20% cut in both of these names.
In this week. But a silver lining, probably you could say IT this week has been the standout. I mean, be it the large caps, be it the mid caps, it's been IT that's probably holding its head up high.
This looks slightly weak. Final thoughts from our experts, and I'm just wondering, the index is not showing as much of a fear as maybe the individual stocks are. Amar Singh, what levels does the Nifty find support at next?
I would say that Nifty has got crucial support coming at around 600 to 650 on the downside. Because if we look at Nifty, the low that was made on 4th of January, that has got good, I would say that should be a good support. So anywhere between 10,600, 650, that should act as a crucial support. But what we are seeing is technically on the higher levels towards 10,900, 950, 11,000 levels, there's a lot of selling coming in, and also the buyers are not very enthusiastic or confident that the index is going to take off from there. So that's the reason we are seeing that, and also the risk reward ratio and ahead of the budget, interim budget. So those are also factors also playing on the market. So I would say it's a choppy sessions going forward, but 10,600, 650 should act as a crucial level of support.
Brijesh, would you concur?
See, the morning also yesterday when we were talking about, I was been saying that Nifty chances are that it would be trying to touch a level of 10,700 or say 10,720. Now today's swing low is somewhere around 10,757 and Nifty got close somewhere 10,787 or 90 zone. 10,840 to 10,850 would be the tough resistance right now, followed by 10,985. I am looking Nifty at least, another sell-off rally would be there, which can take Nifty to the level of 10,640, which is again as an important support. It should not get broken. Even I was been looking the NSE indices, except IT, everything is any sector, everything has been on a downside. So a massive sell-off has been happened, contributed by the auto, PSU bank. Even the bank Nifty is eager to break. If it holds on 2,700, then 27,000, well and very good. Otherwise, if that thing been broken, then another say 400 to 500 points of correction can be seen on the bank Nifty, which can take Nifty to the level of 10,640, which I was been talking about. So a sell on rise strategy would be there for the next week.
Okay, sell on rise strategy by Brijesh. Lancelot, some closing thoughts from you as well?
I think the results that have come off have been a mixed bag, and we've seen large companies also disappoint. So it doesn't really give you that much confidence going ahead. But I think if price is correct, then the valuations can become reasonable, because if you look at the growth over the next 12 to 24 months, I think we are coming out from a bad patch of earnings, and we'll begin to see earnings improve going forward. So if you're able to buy good companies at low valuation, this is probably the best time to start doing your stock picking for your portfolio.
Gentlemen, thanks very much for joining us. Amar, Brijesh, as well as Lancelot. Appreciate all three of you taking out the time this Friday afternoon, and have a better weekend. Well, with that, it's a wrap on this edition of Countdown, and what a roller coaster it has been. Have a great weekend. Thanks a lot for watching. From Neeraj, myself, and the entire team that's put the show together.